Hey, Paul Crogdahl here. Now, as some of you may know, I currently live in Finland. Now, don't get me wrong, this is a lovely part of the world where the ground is covered in a thick layer of white, beautiful snow for most of the winter months. But I must confess to not be much of a cold weather person. Give me the warm summer sun and a cool drink, and I am super happy. Anyway, I would like to take us back to the start of the summer of this year. As is traditional for this part of the world, I was undertaking the twice a year ritual of changing between winter and summer wheels on my car. And I'm sure you can also remember that this is when we started to enter into the whole COVID pandemic situation across the whole world. So as the summer sun was starting to warm up the air, and I was happily and blissfully changing the wheels on my car, my my neighbour wandered over and kicked up a discussion about the escalating coronavirus situation and the impact it was going to have on our economy and his financial stability. Again, you need to remember that we were at the start of the pandemic back in late spring of this year and had no idea as to how big this was going to get or how long it was going to last. So he started by asking me the question, Paul, should I request a repayment holiday on my mortgage? Now, in part, quite bewildered and confused, I looked up at him with one hand now badly balancing my wheel on the wheel hub of the car and the other hand holding the first lug nut I was going to use to attach the wheel to the car. And my brain basically stopped focusing on the wheel, which was now actually quite badly balancing on the wheel hub, and started processing his question. I was thinking to myself, I have a job that still feels quite secure. My family is still infectious free, and I am productively and happily working from home. I had evaluated the impact the current situation might be having on my financial life and made what I thought was adequate arrangements and assumed so had everyone else around me. But all that changed in that split second as he continued to share his thoughts and concerns with me in an endless rambling about money and job security. It actually became obvious to me that he was extremely confused about what options he had and was hoping to get advice from me as someone who works with banks and the financial industry as a consultant for IBM. And he was after advice and insights on what was the best options for him and his family in the current time of critical uncertainty. And as luck would have it, that same moment, the wheel slipped off the hub, falling on my foot and bottom leg, which actually hurt like hell as my focus and attention had shifted completely onto him and what he was saying. And yes, I know what you are thinking. I Paul, why did you not put on appropriate footwear before starting to change your wheels on the car? And I must admit and be honest here, that was one of those times I wish I had put on more appropriate clothing for the job I was doing. But lesson learned, and next time I'll try and make sure I put the right clothing on. But anyway, back to the main discussion that we're having. So I looked at him and asked, have you not reached out to your bank with these questions? To which he promptly answered me, I get really confused by the options and products the bank is offering me, and it is not clear to me what is my best options at this moment in time. And with that, I understood, through the now thumping pain in my foot and leg, that I was basically witnessing firsthand the gaping asymmetry of information and product proliferation I so frequently talk about, that the banks have generated, along with the confusion this is generating for their customers, firsthand through my now concerned and very confused neighbour. Okay, so I have been talking about this and making it a central element in several keynote presentations that I have delivered since the start of last year, I think, and even written a couple of blog posts on it. In fact, this video is based on one of those blog posts. I'll put a link to it in the description. But this time it was not theoretical or academic. It was up close, and my lovely neighbour was a prime example of everything I have been repeatedly stating should change in the current banking landscape. The issue, I believe, is that the traditional banking models are based on the banks pushing products towards the customer with little or no tailoring to fit individual customer needs. This approach is based on an old analog world with a push-based economy driven by banks that were open between 10 and 4. Basically the way things were before digital services and an always connected society became the norm, where the focus is on selling as many generic products as possible with high and hidden margins. And when the product is not moving fast enough, the banks just create some more products and hope that with luck, those new products will develop something the customer will take. But this creates confusion for the customer, and they start to realize they no longer understand the bank or trust the institution. This asymmetry of information has been growing for years and in the past was beneficial to the banks, but that was before customers and regulators started to push for a lot more transparency and clarity in the supplied banking products and services. Let me give you what I think is a good example, right? Colgate has more than 32 different toothpastes, or it was 32 last time I counted, it's probably gone up by then, for us to select from. Whilst choice is a lovely and nice thing to have, without appropriate advice and insight, I as a consumer find myself wondering which toothpaste is best for me and my family. And this is not ideal for me when it comes to selecting something that should basically be simple and quick as part of my normal shopping trip. And I think the banks have for years been using the same approach, and this is not going to be sustainable in the future going forwards. There is no secret in the fact that the growing fintech trend has been seeking to take advantage of this complexity and confusion and proliferation of products by basically attacking vertical banking offerings and building sleek, fantastic, customer-focused solutions that deliver a better user experience. And the customer is again, unfortunately, basically facing a growing proliferation of offerings and solutions, as the simplicity they seek is delivered as unbundled banking services in a multitude of mobile applications, basically getting the same products that were confusing them before, but in new digital fantastic wrapping. The consumer is not seeking a future where the banking experience is spread over a multitude of mobile apps. Banking should be bundled and simplified in a way that is relevant to the individuals and their current phase in life. We should and could see this as delivering agile customer journeys, true agile customer journeys, developed using AI capabilities, etc. So you ask, so what is the answer? Well, of course, there is no one answer that fits all banks. But as the banks drive to become more digital, to align with the changing needs and expectations of the population and their customers, they need to change from an established push model to a pull model. In a digital world where the consumer lives in a self-service paradigm, the old ways to reach them via a push economy is failing. Digital is, after all, a pull technology, and the consumer will select what they focus on and where to put their time and efforts. Additionally, as the banks are pushed to remove the asymmetry of information that they have relied on to date by regulations and a need for transparency, which is dramatically squeezing their margins, by the way, they need to make a fundamental shift from products to advisory services. This will require the banks having to learn how to digitize knowledge to support their customers and build a deep, trusted relationship. Let me give you another good example from one of the more common leaders of digitizing knowledge to drive value for their customers and revenue for themselves. Amazon.com. Everyone's favorite online bookshop. Now you have a thirst for knowledge and want to expand your horizons, so you head on over to Amazon to find a good book, or maybe two good books that will give you what you seek. There are two key things that Amazon do really well to strengthen this digitization of knowledge in a self-service pull-based paradigm. 1. 9 out of 10 times, I would guess, the customer does not have a clear view on what book he or she is going to purchase. So, partially confused by the overwhelming options to select from, he or she turns to the advisory capabilities and services supplied by Amazon, powered by the customer reviews and ratings that are available on the site. You see, Amazon do not sell books as such. They sell advisory services that front the products, in this case the books. You go there to get recommendations on advice on what is the best book for you at this moment in time with your current life scenarios and what you're seeking to learn. And 2, taking insights from your engagements with Amazon over a longer period of time, combined with the collected data from others in your demographic, Amazon is able to guide you and filter out the products or books that are not relevant to you. And as such, based on your current tastes and requirements, Amazon will guide you in an appropriate direction, empowering you to make a choice that is appropriate for you. You see, Amazon empowers the consumer to become data-enabled customers or data-enabled clients that pull the most relevant products from their or for their needs based on advisory services. You could argue that Amazon is charging you for the tailored advisory services that guide you to the best and most appropriate solution for your current requirements and needs, rather than the book itself. Let me ask you a question. Would you be willing to pay a monthly subscription for Amazon ensuring you get the best and most appropriate book every single time, which they sold you at a reduced or maybe even gave you for free. Or for Amazon to put an uplift on all books and just throw every title at you, hoping that something will stick. I wonder, which model do you feel your bank is using today? Bottom line, for Amazon, this advisory-based pull model rather than a product-centric push model is driving higher customer engagement and a higher level of customer trust at the end of the day. But, and here's the but, there is an even stronger argument for the banks to focus on the data-enabled client, even more compelling for the banks than it is for Amazon or Colgate. After a client purchases an investment fund, they cannot simply just return it, as you can with a book you purchased based on bad advice. The banks at the end of the day don't really sell products, but access to uncertainty over time. In this new model, that the banks give the client more transparent advice, which is what they should truly sell to their customers. And as such, the banks will be nourishing their clients with knowledge digitization to create a holistic behavioral awareness. There is another critical element to this discussion as well. The emerging platform economy within banking and the blurring of banking services driven by big tech companies and platform companies such as Apple, Google, Facebook, WeChat and the others. The focus on open banking, which has mixed levels of success, if we're being honest, globally to date, is a starting point for this transformation within the banking industry. And another shift that the banks need to adopt if they want to stay relevant. I am convinced that the future of banking will be platform driven. And as I have mentioned many times before, the banks that survive will adapt a platform business model, either as providers or contributors to one or several platforms in the future. Adapting a strategic platform business model will become the delivery mechanism for the banks to empower the future generation of data-enabled clients in a close collaborative partnership between technology providers, big tech companies and fintech companies. The banks will utilize artificial intelligence and their wealth of data to drive new insights and services to deliver tailored, just-in-time financial life advice to their customers, combining banking and non-banking services and products. Now, if we return back to my confused but lovely neighbor again, who was concerned with how the pandemic would impact his financial life and what options were open to him, as someone who is probably a good representative of the general population with a basic but adequate understanding of banking products for a normal everyday scenario, it's not surprising that he finds himself bewildered and overwhelmed by the complexity and options available to him. What he desires really is the Amazon of Facebook for his financial life, a platform that gives him the ability to pull in a self-service model, relevant advice which empowers him to make the best financial decision for him and his family as a data-enabled client. Will the banks know everything? No. After all, the banks themselves are not clairvoyant, right? But they should be a trusted partner in a complex financial universe. The banks should have the data insights, knowledge and capabilities to enable us all to become data-enabled clients and to make good financial decisions. I'm starting to see some banks make moves in this direction, but believe they cannot make the journey completely alone. This is a partnership and ecosystem game, and will also require most banks to revisit their aging legacy systems and the need for core modernization. And I mean core modernization both of the IT systems, but also moving to a more automated process rather than a lot of the existing, still present manual processes that the banks have got in the back office. What do you think? Please leave your thoughts in the comments below, and we can continue the discussion. I'd love to have that discussion with you. So that concludes my initial video on the subject, and there will be more to follow, I hope. If you have enjoyed this video and would like to hear more from me, then please let me know in the comments, and please hit the like button and subscribe button. You might also enjoy my FinTech and Banking Technology podcast, FinTech Daydreaming, which I co-host with my friend Ville Sointu. You can find a link to it in the description. This has been Paul Krogdahl. I hope you have enjoyed the video, and I will see you all in the next one. Stay safe, have a fantastic holiday, and stay happy.